Good morning. This is Larry McMillan with a market comment on Monday, July 6th. Hope you had a great holiday weekend. The market has repudiated two attempts during June to go down. Big down days, heavy selling, 90% down days, but it didn't really make that much difference. We are now on the verge of closing the gap on the island reversal that was left back in mid-June. If that happens, that's actually bullish, and then we'd be looking at resistance areas above here. 3230 would be the next target. That's the high of the March post-March rally so far, and then 330 and then 3360, and then the all-time highs 3390. So the closing of this gap on the island reversal would be an important thing if it can occur. Meanwhile, the equity-only put-call ratios remain on sell signals, and that's negative, except that they're not really racing higher. They're just sort of moving sideways on their chart. In a truly bearish situation, we'd expect them to move higher, but they were extremely overbought, still are very overbought, so that's a negative indicator. Breadth has been back and forth. We had some sell signals in the past couple of weeks, and those are being canceled out. Now it appears with this morning's rally, the breadth oscillators are back into modest buy signals. New highs, however, have been dominating new lows, and that's a much better picture there than we've seen in quite a while. Not so much so on the New York Stock Exchange, but on our stocks only data and NASDAQ data. Then the volatility indicators are, well, mixed. I mean, we saw VIX bounce again off its 200-day moving average last week, came down and touched it at about 26 and jumped right back higher. VIX is even up this morning with the market up strongly. So there are still plenty of people buying S&P puts for protection purposes or perhaps speculative purposes, and that keeps VIX inflated. As long as VIX remains above its 200-day moving average, that's still a negative for stocks and could come back to be a problem. On the other hand, we do have the VIX spike peak buy signal that's still in effect. So all in all, we've had sell signals from, or have had sell signals from equity-only put-call ratios, breadth, modified Bollinger Bands, various things like that, VIX spiking. But none of them have actually caused S&P chart to break down. It would have to break down below 2920 to enter a bearish formation, and that has not been forthcoming so far. So the bulls have a chance here to close this gap and drive this thing higher, even though it's still pretty overbought and probably will lead to some misery later down the road. But if they can close above 3184, then I think the bulls will regain the short-term upward momentum. Invite you to visit our website, optionstrategist.com, and note a few things, one of which is that we're having another Saturday webinar coming up in a couple of weeks, and you can sign up there. So thanks for watching, and have a great week trading.